Robert Heffernan exclusively. Robert Heffernan with EndoTech, exclusively for Bredo Network and EndoTech subscribers. This is Blockchain Vitals. It's our daily show. I'm a master endotechnician, firmly in the matrix, where I trade cryptocurrencies. Please follow us at Twitter. EndoTech _IO and HFR from the floor are our two handles. Let's do the rounds and talk cryptos. All right, doing the rounds. We're going to talk about the price action in the vitals section in just a minute. Pretty much sideways as we go here after that big pullout from the lower momentum level, right? We were lower momentum for 15, 16 days in a row, and Bitcoin now sideways 6 days in a row now, pretty much. So you always have to ask yourself now, are we rounding a bottom here, or are we going to make another leg lower? Now, I talked Sunday night about those levels that I thought was important on the weekly. I'm going to revisit that. But there's been a lot of talk, especially in the Twitter sphere, on social media, about the crypto winter. Everybody loving the analogy of Game of Thrones. Winter is coming. Winter has come, and it's going to be long and cold. In Game of Thrones, nobody knew how long winter lasted. It could last for years, sometimes decades. We are obviously hoping not for that, but I really got to tell you, I really think that 2019 is going to be the year of the detachment, or the year where cryptos suddenly were not 98% correlated. 2019 is going to be the year of winners and losers. And the losers are going to zero. Hold on. Let me just talk about zero for a second, because I have it. That's the back of it. And this is the front of my Lehman Brothers stock. I worked for Lehman Brothers. I got stock working for Lehman Brothers, and it went to zero. So if you do not think that your particular cryptocurrency can go to zero, believe me, everything can go to zero. In fact, we all go to zero. But the other thing I wanted to talk about, because it was on the Twitter sphere yesterday, we had some technical difficulties, and I wasn't able to chat about this yesterday, but Ari David Paul just welcomed onto the board, and his firm invested in our good friends at Athena Bitcoin in Chicago, Illinois. A very informed crypto person, very informed in this space. And there's a lot of talk about the crypto winter. And so he's talking here, and I'll just read the quotes really. Let's say Bitcoin is 1,000 K, an average electricity cost, and the most efficient half miners is 2,000. It's $1,000 loss per coin, 1.8 million a day to sustain current hash power levels. But after 2 weeks, the difficulty would drop and eliminate the problem. Now, this is a little bit over my head on the technical side. But what he's trying to say is that asking out there, will miners, are there big enough miners that can sustain losses for a 2-week period? And we're not talking a small amount of loss, depending on how big you are. But will there be miners that will suffer the loss? And it's not just, and I just learned this, it's not just in anticipation of higher prices going forward. So you're going to eat the losses. And I tweeted back that this goes on all the time in many, many industries. People, I trade a lot of hogs, and there's sometimes when those hog margins are upside down, that doesn't mean that they stop killing pigs and processing and you don't get to buy bacon anymore just because somebody's losing money doing it. It's the ebb and flow and the evolution of the market. I mean, there's plenty of times, oil refiners and oil producers, they're going to operate at a loss, understanding that the price is going to come back. They have a long-term view of the market, that we're not going to stop driving, right? And miners and zales, right? Diamonds, people are still going to get engaged. Anyway, but the most important thing that I just learned, and it's from my Twitter friend, and I got to tell you, one of the most knowledgeable guys in this space, Andreas Antonopoulos. I think I've pronounced it right, the Greek. I got to tell you something. If you want to learn about cryptocurrencies, that guy puts things together in a way that, for me, somebody that does not understand cryptography, he explains things the best as far as I'm concerned. And what he pointed out is not only are there going to be people willing to operate at a loss, but because of, as they keep hashing or keep involved in the market, if you have a place in the ecosystem. So if you just shut down and don't do anything, you lose your place. So yeah, you might. That's the way I'm understanding the way he explained it. And believe me, I could be wrong. But that's kind of the way he explained it, that people aren't going to just turn off their mining machines because they don't want to lose their place in the ecosphere, in the mining sphere, whatever sphere that it is. So it's, people with deep pockets, they'll keep mining. They'll mine at a loss. They'll build their Bitcoin reserves. The question is, for me, is how far does this thing drop? How far does it crater? And I think that challenges the situation. Not only that, but Andreas also pointed out that if the price is so low that the losses are so great that nobody wants to mine, the whole system can come together and reset. Now, it's difficult in a blockchain setup because everybody in the Bitcoin mining, everybody's got to agree on it, on a change in the protocol. Everybody. Anyway, maybe I'm rambling, maybe I'm confusing you more, but both of these people, Ari David Paul and Andreas the Greek, point that they don't see that the miners are going to go away or stop supporting the network just because they have to operate at a loss for a time being. We will see. Let's talk about the price action, though, because, very, very important here. So I got to say goodbye to the YouTube crowd because you need to be an EndoTech subscriber in order to view this content. So please subscribe at EndoTech, and you can watch this at endotech.io. All right, see you later, YouTube, and let's take the vitals.